Hello, hello, everyone. Come in. Happy Tuesday to you, and hit that like and share button. I want to make this live stream on this particular topic of infinite banking, and the reason why I'm making this live stream is because this morning I came across a YouTube channel, and it was a black male, and he had made a live stream on this particular topic, and we are going to look at some of the comments in his live stream, and we're going to have this conversation about infinite banking and why I do not believe it is for the middle class. I do not believe this is a tool for the middle class. I do not believe it. And forget the echo in the background. I'm just sharing with some of my other platforms like Twitter and Facebook that I am live. So in order to help me share that I am live streaming, I'm going to ask that you hit the thumbs up, leave a comment with your opinion, if you're watching this live or on the replay. And if you're on Facebook, share this on your personal Facebook page. Let's have this conversation. I believe that there are different strategies, different tools for the middle class to position themselves to become at least millionaire status, or deca millionaires, also known as multimillionaires, than the tools that the rich and wealthy, and especially inherited wealth, uses. There are many multimillionaires that I have had the privilege of having conversations with, and their mindset and their communication about money is just totally different than what most middle class is. Oftentimes, in those cases, they've already left inherited money to their children. And in some cases, this can be in the multiple millions. And sometimes I've spoken with people through my travels, in the billions that they've already inherited or passed this on through a trust or maybe some type of whole life policy for their children, so that their children and their children's children can inherit generational wealth. But more than that, generational wealth that is tax free. I was having this conversation with my daughter today, and one of the things she asked me, she said, "They tax you when you die?" She couldn't believe it, because I was telling her, we was having a conversation about some of the different benefits, and I said, well, they really sell most middle class Americans on the idea or the concept of being able to pass their tax death insurance tax free. And she said, well, they tax you when they die. I said, honey, you're taxed when you die. Let me move this over. I said, you're taxed when you earn money, you're taxed when you spend money, you're taxed when you save money, and you tax in some cases when you invest money. So let's have this conversation. I want to share my screen real quick uh, with this video that, again, I came across, and we're going to read and dissect some of the comments and why I believe that in most cases for the middle class, that, and they have different names, right? It's different names to this. Um, some names are IUL, Index Universal Life Insurance. Some names are private reserve accounts. Some names are cash value life insurance. And some names are whole life. Now, just the name whole life insurance policy, and it's also known as AKA infinite banking, gives you a clue that you have to, yes, you should be prepared for to pay for this for your whole life. And so if you're paying high premiums now with your job income, for example, if you're paying high premium now with your job income, what happens in your elderly or retirement years when your maybe pension income, if you're fortunate to still have a pension, or maybe your 401k income, or whatever your retirement income may be, Social Security, Medicare, hopefully it's not just Social Security and Medicare, right? Do you have the sustained income amount to be able to afford in your elderly years these high premiums. That's something you will ask yourself, right? So let's look into this video. I'm not going to play the video that he made. His name is Ernest Burley Jr., and he's a CIA, and he's also an independent insurance. He's the author of a book. And he says, infinite banking, don't do it. Now, again, we are just going to look at some of the comments. Now, the comment that stood out to me, let me see if I can find it, is someone that says that, hey, I'm paying, okay, here's one that says I'm paying $300 a month. There was another comment that said I'm paying $200 a month. I may not be able to find that one. So let's read. Tax advantages 401k gets taxed heavily. It's just the strategies for other avenues of business. 401ks are not perfected by any means. And that is true. I don't know if you all know this, but the 401k was invented after the Great Depression. The reason why it was invented after the Great Depression, because those Americans during that time had lost so much money, has lost all of their money, finances, homes, etc., all of their life savings in the stock market. And they did not trust the stock market anymore. And so the 401k, which is just a tax code, right, is not built, it's not manufactured, it's not structured to give you, in my opinion, a very comfortable retirement. And so they created the 401ks so that Wall Street would now have a way that was more discreet for people to put their money back into Wall Street and back into the stock market. So that's the history lesson behind the 401k, right? Let's read another comment. Those high monthly premiums are essentially a savings vehicle. Instead of putting the money in the bank that someone else owns, you are putting into your own. Also, recapturing your capital day one is benefit. Okay, whoever made this comment, I'm not sure if this person actually has a whole life, a IUL, a PRA, private reserve account, however what cash value, because it is very unlikely that you can recapture your capital after day one. Benefit. There are some premiums that if you put enough lump sum in there in the thousands, that after 30, maybe 90 days, right? So you also need to check the rating and to check the type of business company and the rating, right, of the insurance policy that you may invest in. Now, so day one is very unlikely. However, the comment goes on to say, infinite banking is not an investment. That is true. People need to stop saying this is an investment. This is not an investment. This is putting your savings account, if you have one, on steroids. If you have money just sitting idle in the bank, this is a better option than having thousands of dollars sitting idle in the bank. It's not an investment. It should not be sold as one. It's simply a savings, what I just said, on steroids. After you pay your premiums, you break even with dividends. Typically, your typical breaking even years is 4 to 7 years. This is so true, right? And now, but I do want you to understand that up to that point, the insurance company keeps your cash value, right? The insurance company keeps your cash value. And if that cash value is not used while you are living, it does not roll over into the death benefit for your beneficiaries, right? They will only get the death benefit part tax free. If you do not use the cash value, that it may take you up to 5 to 10 years or 4 to 7 years to accumulate. In most cases, right? So your cash value, right, can be surrendered. It can be surrendered at any time, but you have to make sure these are properly structured because, and I might need to get out the screen, let's finish reading some of this and I get more into the other things, right? Um, and borrowing against it, or should you leverage against it? Should you borrow against it, or should you withdraw against it? Let's talk about that. So, someone said, what you're saying is all facts. Really depends on how the policy is set up, which is true. Mine was set up that I only have to pay in it for 8 years. That's it. But I can borrow 90% of my cash value, what I put in after year one. Okay. I don't know what they have. Whole life mean usually means paying for your whole life. Um, the plans I set up for clients give 100% of their cash value. That's a good plan. If you give 100% of their cash value, this cannot do attitude. Okay, info banking. Great video, but I think you should dig a little deeper. The banking policies are structured differently than other policies. It's structured, if structured right, at some point, every premium dollar goes towards cash accumulation. And again, everything is if structured right. If structured right. I love infinite banking policy. I like my freedom. I don't need to worry about making a premium payment. I don't know where the hell all these life insurance agencies want hardworking people to come up with money just to throw on a policy. Mm, okay. Okay. The lowest amount they start out with is $300 a month for clients who are looking to get out of debt and save money at the same time. Interesting. I get out of debt and save money at the same time. Okay. I also have business owners and RE investors putting anywhere from 50 to 100K a year. Now, if you can afford to put in 50 to 100K a year, then this could possibly be for you. They do it because of leverage, liquidity, and control. If structured correctly, they can generally start banking in the first year. With that being said, this isn't for everyone. Absolutely not. A matter of fact, it is for most. Again, it depends on what the objective is. Um, and then someone said they was based on the talking points. I agree with him. It is situational. The majority of Americans are living day to day and paycheck to paycheck. For a few, infinite banking concept is an excellent strategy to create multi-generational wealth. So, last one that I'm going to read. First thing is fund tax deferred accounts to go from there. Putting money in a whole life policy might be for some, but one big thing is to consider the rates of return. Do you want to put your money in a low return vehicle? Just think about it. Put $500 in a policy, 12 times a year, that's $6,000. A vehicle like Marcus is something to average into. It can take a few years to build a strong, low average price base. It can take a few years. Putting funds in a whole life policy is missing the opportunity that there is to begin averaging in now. $500 times 1 year or 12 months times 20 years at 4% interest in a whole life policy is approximately $184,000. In an investment that's increasing by at least 9.5%, would be approximately $345. People, you had Ethereum, for example, in crypto, that from this month, from last month to this month, has increased 16.8% the last I looked at it. Okay, but let's go on. If anyone wants to say insurance is an investment, that's their decision. The difference in dollar amounts makes its own point. If you can top up a vehicle in a year or two being consistent, just remember it's time in the market. Not time in the market makes a good investor. If you inherit 50,000 something sizable, you can put money into a different investment option, right? I don't want to read all of this. Um, I can really see it is sad agents talk about infinite banking concepts, but they don't mention of being able to borrow against other assets. A variable or universal life can be used as collateral, right? Some sheltered investments, ones in a taxable account also. I could go on and on. So let's talk about different scenarios and why oftentimes I don't think this is the best advice for the middle class. Now I'm showing 133 people live, so come in at least and say hello. I don't know why my banner, my name is not showing. This is your first time watching me live. I am known as the Crypto Queen, but I talk about financial education and financial intelligence, not just cryptocurrency. So, this is my opinion backing up that video. First of all, for most people, middle class, if you are what I consider upper middle class, meaning that you are earning at least six figures, preferably over 200,000 a year, this may be a good option for you, right? This may be a good option for you. But people that's telling me they're putting $200 to $300 a month into a premium because that's the amount that they can afford, and they're looking at this as a wealth building tool, not to sustain wealth or to pass on wealth, tax free benefits, but to build wealth, then I think it is totally BS. This is not a wealth building tool. Also, if anyone is trying to convince you, I heard this concept that I do not agree with, to take out equity out of your home just to have the thousands of lump sum to be able to finance and take advantage of the cash value being built and liquidated and pumped. I do not agree with that as well. If I'm going to leverage equity in my house, it's going to be for other real estate deals, right? You can easily set up a HELOC, a home equity line of credit, HELOC abbreviated, and you can use the equity in your existing home to pull out at any time. And it works like revolving credit, which is like your credit card that you pay the balance down, and that money is continuously available to you to pull out and recycle. You can but if I was going to put my house on the chopping block to do anything like that, it would be to leverage and obtain other real estate deals, because that's a gamble. Not to put in an infinite banking model. This is the reason why. You never know what can happen that will cause you or your spouse to lose a job. And most times, to get the maximum benefits from these policies, I think you should be able to fund them at least $10,000 a year. That puts you at a monthly premium of $833 a month. $833 a month. And to put you in a position where you have five figures or six figures to roll over. And chew it that you have sitting idle in a banking account. Now, most rich and wealthy people do not have this money sitting idle in a banking account. So let's talk about borrowing against the policy. Many agents sell you on the concept and tell you things like, you can become your own bank. You should become your own bank. Why pay the banks that interest when you can pay yourself? And the most they get into is purchasing a vehicle, buying a vehicle, a car, a truck, a van, whatever it may be. So I will share a clip with you on really looking at when you become your own bank and you use these policies to invest in the vehicle or to buy a vehicle. And we all know that vehicles are depreciating assets. So I don't like that advice either. Right? It's just like all of us by law are required to have automobile insurance, right? And let's say for 4 to 7 years, we are safe drivers in those vehicles. And after maybe 4 year, year five, or year six, we are in an accident, whether it's our fault or the other driver's fault. But we're in an automobile accident. Now, you know that the insurance is going to leverage how much they pay you for repairs if the vehicle is not totaled out based on the market value of that vehicle. Now, in 5 to 6 years or year four, that vehicle has highly depreciated. So even if it's totaled out, the amount you paid for and the thousands you put into it for insurance is not what the insurance is going to give you for a totaled out vehicle. And in repairs, you still have some out of pocket expenses based on your deductible. So you can really say in often cases that if you're a safe driver, that automobile vehicle is more beneficiary to the big insurance company than it is for a driver. Now we understand that everybody is not a safe driver, and it's good to secure your vehicle. Same thing with cash value life insurance, IUL, private reserve accounts, whole life policies, right? Um, the cash value part, and many salesmen will hook you on this, is for living. It's not to use for death. But that money, if not used for living, will not carry over to the death benefit. It just goes away. Also, something you need to know, again, as I mentioned earlier, if your job situation changed, or your spouse, or if you're single, and for some reason life happens and you're not able to pay those high premiums and you lapse on the policy, you lose everything. So when you have been told that this is a low risk investing tool, first of all, it should not be an investing tool. It should be a better place to store a large lump sum of savings. It should not be considered as an investment, meaning it is better than what the banks give you to hold large sums of cash. And I do not think your house equity should be used to fund these insurance policies. That's too big of a risk, in my opinion, just like I believe that your equity in a house should not be used to buy your son or daughter a vehicle at graduation. But some people do that. They take out the equity alone in their house to buy their child a brand new vehicle. Those are not good reasons. I don't even believe that equity in your home should be used to pay off credit card debt. I don't believe that, because with credit card debt, there are very little ramifications if that debt cannot be repaid. I've heard some people in the credit repair business, when I was doing credit repair, that advise people to take out their 401ks to pay off credit card debts. No, in that situation, looking into bankruptcy, I know most people look at bankruptcy as a scarlet letter, but when you have revolving debt, that there's little repercussions or ramifications of not being repaid that can easily be discharged in bankruptcy. The most I advise people is be prepared to live at least 2 to 3 years basically off of your cash flow and not credit. So you should definitely be positive cash flow if you're even thinking about filing bankruptcy. But the point is, most people are not. Right. So let's look at the numbers. If you are receiving a 4% interest on your cash value and you decide to take out a loan at 5%, this is another video that I came across. So this is an example of a $30,000 loan taken out to finance a vehicle at $30,000 for 5 years. And then The loan is financed at 5% while your money is earning 4%. So let's listen in.
The balance increases at a 4% annual rate of return. Each month, you're earning 1/12 of that 4%, or 0.33%. See how the balance continues increasing along with the amount of interest you're earning. As the balance increases, so does the amount of interest you're earning each month. And then in month 13, you're paying $102.43 in interest that month, and you've earned $104.07 in interest that month. What this means is from month 13 all the way to month 60, you're earning more interest than you're paying. By the time you pay off your car, guess what? You've paid $3,968.22 in interest, but you've earned $6,629.90 in interest in your bank. That's a net gain of $2,661.68.
So this was an example. If you took out a loan for a vehicle, right, and the loan for that vehicle was 5%, 30-year, 5-year loan, at 5% interest, and the $30,000 cash value that you borrowed against is earning 4%. After you pay off the loan, after 5 years, the more you're paying the loan down, the lesser interest. As he said, in year 13, you're paying about $102 a month in interest against the loan of the vehicle. But your money is still earning the 4%, and that money is gaining interest. It is even gaining compound interest. And so after 5 years, you still are in a profit of $2,661.68. Now, with that being said, um, hey, that's better than taking out a $30,000 loan, paying the banks back that $6,000 interest over the time. You're still in net profit, right? That is better. You're still in net profit. Warren Buffett said the number one rule of investing is never lose money. You didn't lose. And then he said rule number two is always remember rule number one. So you had a game. But I'm gonna tell you what a better game plan, and this is for middle class people. This is not for people that are already rich and wealthy that want a tool to pass down millions and billions to their children and pass on generational wealth, like the Bible instructs us to say. The scripture actually says a good man, right, leaves an inheritance, and not just to his children, but to his children's children. That means to his great grandchildren and his great great grandchildren. That's actually Proverbs 13 and 22. But may I propose to you that most rich and wealthy people do not take out loans for these vehicles, or these infinite banking policies to buy or purchase a vehicle. They don't. They may at some point, but their mass majority of what they do is they take out a loan against it and they invest with that money in real estate that's going to bring them bigger returns than 4%. J.C. Penney, during the Great Depression, took out a loan against infinite banking concept, against his policy, and expanded all over the United States J.C. Penney retail stores. Walt Disney took out a loan against his policy and built commercial real estate and commercial entertainment. Walt Disney World. Most middle class persons are sold on the dream of to do little things like take out a loan to purchase a depreciating asset like a vehicle. And they're not told that if you have a $200 or $300 premium, $150 of the $200 It's probably going towards your death benefit, not to build up the cash value. And they're not been told maybe you have $300, that $200 is going towards the death benefit and $100 towards the cash value. They're also not being told that during times of recession, depression, which the economy on a global scale is transitioning into, that during the time that your policy is being traded by the agent or the business company, that's called options trading, to keep you afloat of what's going on in the real estate world, that you may have premium calls and higher fees to pay during that time that the stock market is crashing, in order for them to adjust your policy to where it is not overall affected by the stock market crashes. And there are some times that your policy will earn above 4%, but there are sometimes the policy will be at a very low 1% or 2%, or maybe a 0.5% during times of recession and depressions, like the bank's money. So what it's saying, that on overall averages, that you really don't lose money, but there are some years that you will make very little money. So I always ask the questions: how long do I have to pay into this policy to build up my cash value, and how much, so where I can borrow against it, or you can leverage it. Either you can withdraw from it, or you can just use the policy to borrow against it. That means you're using it as an asset, and you're taking out a loan from the bank elsewhere, but your money is still making money. But are you in a position where you can repay the loan at the bank and pay the premium of the policy? Now, there are situations maybe that if you took out a loan, for example, to finance a vehicle, and where you are not able to make the payment, they will tell you, okay, you can not make a payment or two or three. But if you totally lapse on that policy, everything is lost after so many non payments or inability to keep up with the premium. Now, if there are some other policies, infinite banking, where you can have a policy for 8 to 10 years, drop me some comments. But most rich and wealthy people that have these policies, they're called whole life. They are expected to pay their premium their whole life. So you have to look, will you use that policy as a leverage during your living years to really invest in assets and not liabilities like a vehicle, but an asset like real estate, where you're building up equity in real estate. And maybe if you have apartment houses, for example, you have tenants that's repaying back the loan while you are accumulating equity, and you are getting positive cash flow over the amount of the loan repayment at the same time. So if you have lump sum of thousands to put in this without risking your equity in your house, and you just have money sitting idle at the thousands, which most rich and wealthy people don't. But if you're a middle class person that do, and you feel very confident that even in your elderly years, you can keep up with the high premiums. And again, I think that you should be positioned to at least put $10,000 in these premiums in these policies to make it worth your while to leverage and use the cash value portion while you are still living. If you're not positioned to put $833 a month, then you really should ask yourself, would that money be better off for the middle class going into other investing that are investing streams? Because again, you should not look at these policies as an investment that's going to make you wealthy. This is an investment to sustain and keep wealth to be passed on tax free, not to make you wealthy. Jack, let me read your comment. Raised up differently than wealthy people, but with the knowledge we can create generational wealth for our children and their children's children. Thank you for your teaching. Thank you um, for that comment. Now, middle class game plan, in my opinion, is cryptocurrency, and I'm going to emphasize blue chip cryptocurrencies. Again, we will look at the price of just Ethereum because Ethereum is a blue chip cryptocurrency. And what's going on with Ethereum right now is that it's being moved from proof of work to proof of stake. What that means in short is going to be more economically or more eco-friendly for the economy as far as mining, right? In other parts of the world, in the UK right now, for example, they are experiencing high heat. So whether you believe in weather manipulation or not, I do. I believe in heart. And they got 100 million people at risk right now of record heat health problems. And as much as such as the United States having high heat index this summer, unprecedented temperatures, a lot of mining, and they are very conservative about the energy right now and preserving anything of energy. So in Texas right now, Bitcoin mining, for example, has come to a halt. So any cryptocurrency that's able to convert, right, um, and to be mined, that's going to be friendly for the economy is getting a lot of attention. And so these are the mergers and transition and the changes that Ethereum, which is the number two crypto in the world, is going right now, is doing right now. So let me share my screen with you to show you just the gains in Ethereum in 1 month that you definitely can get. I'm not talking about 4 to 7% a year. I'm talking about 1 month. So we got Ethereum on today, just 6% on today, 44%, right? Last month it was at $900. So it's almost at 1,800 where you would have, if you would have invested in the red, in the dip, would have almost tripled your money. Now, why is this important? Why is this important, especially for the middle class, right? Especially for the middle class. Because this is what can get you to the millions, to the thousands. And then if you want to convert it over and play the game that the rich and wealthy play and pass on tax-free death benefit money, and then leverage infinite banking policy to then, in my opinion, invest in real estate, wise real estate decisions, then that's a great game plan. My whole game plan for cryptocurrency is not to stay liquid. Much of this cryptocurrency, probably about 50% of mine, is going to go into real estate investing. That residual income, God is not making any more real estate. And it's the only investment asset that has the word real on it. So I almost doubled your money. Now, most would argue that because cryptocurrency is very speculative, right, that they would prefer if people that I think cannot afford it, right? I don't think it's affordable. And again, it is not a wealth building tool for middle class. It's a wealth preservation tool for the rich and wealthy. A big difference, right? So the annual inflation rate And let me see if I can pull this up. For Ethereum, has only been about 4.5%. It hasn't even been 5%. And so for the year, let me see if I can pull that stats up of how much for the year of 2021, Ethereum alone would have brought you a 391% return. Now, where they do that at? Even with the dips, even with the crashes, even with the crashes. While I'm going back and forth with people about a 4% tool that only I think applies to the rich and wealthy. This is even in taking its crashes. See, the thing is, let's look at these increases by the year. 2016, 1,070%. See, men lie, women lie, but numbers don't lie. 2017, 12,500%. 2018, 89.20% on your investment. 2019 is saying a negative right here. It is showing a negative 1.67%. 2020, 488% return. 2021, 391%. And in 2019, where it was operating in negative, imagine if you would have invested then, the gains you would have gotten back. So with that being said, people, right? Thank you, Todd. He said, nice shirt. Thank you. Peace to you, my king. With that being said, blue chip cryptocurrency, if you are middle class and you want to become millionaires, right? And also, if you see the website on there, silver for the middle class. Because I'm gonna see if I can pull up the article. I just read it last night. That in 2021, it was an announcement that there was a shortage on silver. So if you're gonna go to JD Bullion or Ampmex and purchase silver, you can position yourself to get silver and an opportunity to get that silver for free and get residual income. And this is you're getting silver at the wholesale price. You're getting it at the same price as the dealers itself. It comes with a residual opportunity of sharing it, residual income opportunity of sharing it with other people, which in essence means you can get this asset for free. So global silver demand surged last year. The silver and industrial demand is up 9%, a new record high. The global silver market realized growth in every demand in every category, making the first time all key sectors rose in tandem since 1997. And so a global silver demand, people, that reached its highest level since 2015, surging 19% to 105 billion ounces, leading the way. That was for the all-time highs for silver and industrial application. Physical silver, physical, not ETF, physical silver investment, sales of silver coins and bars leaped by 36%, its highest level since 2015, as retail investors in North America and Europe, motivated by safe haven inflation concerns, silver outperforms physical gold in a bull market, right? Now, this silver is so on demand because you have things like solar panels, electronic vehicles. They are rising by consumption, rebuilding stocks, right? India paved the way for silver jewelry on demand, 45% up. Thailand, followed by Italy, United States. This is a global silver demand that surged last year, not just the United States, globally. Because silver is not only used for money, it's used for industrial uses as well. It is twofold. Jewelry, silverware, again, solar panels, Tesla, RFID chips that's going to be high in demand, 5G Wi-Fi technology, when cryptocurrency and the central bank's digital currency comes into play. Everybody's going to have a mobile phone for mobile banking. Silver supply. At a point, actually, in 2020 into 2021, the exchange brokers online was not even selling silver. They were sold out. You all remember that? After the shutdown, you couldn't even go on JM Bullion, Amex. You couldn't go any online brokers and find and purchase silver. Sold out. So silver, if accumulated, is inexpensive, will be highly on demand. And again, if you're going to accumulate it and convert those extra cash savings that you may have in your savings account, that's a very inexpensive way to become rich, as well as these blue chip cryptocurrencies. Versus paying $300, $400, $500 into a premium that most have not been fully educated middle class to learn how to do. That money can be dollar cost averaging in crypto and silver and give you a higher rate in return and actually make you a thousandaire or a millionaire, where these insurance policies are not made or created to make you wealthy. Again, it's to sustain wealth. So if you're going to invest in it anyway, why not go to queenofcoinsilver.com and get yourself residual income and then get it at the price that the dealers get it at wholesale price, where you can get paid and get the asset at the same time. You can't get that on JP Bullion or Amex, for example, or SD Bullion, right? So I'm closing it up. That's just my blueprint for the middle class. I welcome for you to leave your comments. Also, I'm reading this article where a billionaire CEO warns of food shortages. So I also inform everyone, middle class, millionaires, multimillionaires, or billionaires alike, that you want to stock up on your coins, being your crypto blue chip coins and silver coins, because silver will outperform gold. And when you get in and have your crypto education, you know what cryptocurrencies are going to last. It is rumored that regulation is going to happen in October. So after regulation, some cryptos are just going to be junk cryptos. So you want to make sure you have the cryptocurrencies, you have an education behind that as well. That's going to last going into this fourth industrial revolution. So billionaire CEO warns of food shortages as Biden policies hurt American people. More concerned with food prices than even oil prices. And so similar concerns were also voiced on Mornings with Maria. And, they're just saying that with Biden policies, that the rise in food prices could have serious geopolitical consequences. The United States inflation hit a new 4-decade high, 9.1% last month in June. And it says even though gas prices have dropped nationwide more than 52 cents, reaching record high June 14th, inflation's worst is yet to come. I told people that I met a person that worked for Wall Street, income about 300K a year out of New York, and that person gave me the message that we are not in recession, we are in inflation, and that starting in August of this year, that it's going to hit the fan and people are going to really see what recession looks like. I had more people debating with me about if we were in a recession or not versus them paying attention to the latter part of the comment that in August we would start seeing a turn for the worse. They totally forgot about that. It was like, oh, we already in recession. I said, no, we're in inflation. Now they see gas, and I said this in June, now they see gas pricing dropping. They should understood what I meant. This person that works with Wall Street, New York, 300K said beginning in August. Now, I've always predicted beginning in October because according to the Bible and the biblical calendar, September 26th, which is my date of birth, October ends Shemitah year. After Shemitah ends, the economy have always like clockwork. It has never ceased to not do this. After 7 years after Shemitah, it happened with 9/11. It happened with the housing market crash in 2008. The market went upside down and took a turn for the worse. However, we are experiencing the 50th Jubilee times. We are experiencing a great reset, and this will not be another recession. This will actually be headed into a depression. So, with that being said, what is financial intelligence? Let me break down 3 components that makes financial intelligence. How much money you make. You hear a lot of middle class people quote this, that they hear wealthy people say this as well. But notice who's saying this. Like, right, Shaquille O'Neal, for example, who's a multimillionaire, said it's not about how much money you make, it's about how much you keep. Well, for him, that is true. But for most middle class, it's about how much money you make. It's about how much of that money you keep. And when I say that, I'm not talking about how much you can save at the end of the year. Because if we go to Matthew 25 and 13, the servant or the worker that saved his money and dug it in the ground, he did not even spend it. He saved the money. You would think that when the master returned, he would told him, well done. Because most people would have spent it. They would have just went on a shopping spree. They would have been saying YOLO. You only live once. They would have been saying one life. Why not? They would have been buying bigger screen televisions, shrimp, steak. You know, the government gave you stimulus. What did you do with it? Did you invest it or did you spend it? So at least he had the mindset not to spend. The word spend has end on it, END. No, he saved it. And when the master returned, he called him wicked and evil. He said, I'm going to cast you into outer darkness where there's weeping and gnashing of teeth. To me, that translates hell on earth. It did not say, I'm going to cast you underground where there's fire and brimstone. No, he says, in outer darkness, you're going to be in poverty where there's weeping and gnashing of teeth. You're going to be in hell on earth because you could have at least took my money to the bank and earned interest to the exchanges. You know what stopped that person from being successful? Fear. Fear and lack of knowledge. Because he told him, he said, I knew you was a harsh servant and you reap where you have not sown. That's why I kept your money and I hid it in the ground. Fear. Fear. Going to Matthew, I think I said 25 and 13, 25 and 14. And he's the one that had the least amount. See, people, when you don't understand the tax game, keep more of the money that you make. When you don't understand income taxes, you can say it's illegal, but I'm giving you a very legal and very profound and powerful way to keep more of the money that you make out of your federal taxes. which will increase your paycheck every pay period. All you have to do is text cash flow on the screen. It is just that simple. And to get out of your poverty mindset and to get out of fear. You know, most people understand or they're celebratory of tax savings. Come August, back to school shopping, it's going to be tax-free weekend. You're going to see the economy bust wide open because people feel like they're getting a deal. I don't have to pay taxes on my retail clothes this weekend. But you can have that feeling every pay period out of your paycheck. Or if you're a small business owner, you can have that feeling of getting bigger tax refunds, bigger than the PPP from the government every pay period. I show you how by texting cash flow to the number on the screen. So the man who had received one bag of gold came and said, Master, I knew you was a hard man. You harvest where you have not sown and gather where you have not scattered seed. So I was afraid. What keeps people in poverty is fear. And I went and hid. I saved your money in the ground. See, here it is. I have what belongs to you. And his master said, you are wicked. So if you're not multiplying your money according to the Bible, you are wicked and you're lazy. If you're not putting your cash money into anything that's outpacing inflation according to the Bible, I'm not saying this. I'm reading the Bible's words. According to the Bible, you are wicked and you are lazy. Wicked and lazy servant. So you knew that I harvest where I had not sown, and I gather where I do not scatter seed. People, this is compound interest. When your money is making money, that's the third principle of financial intelligence, where your money is working harder for you than you are working for the money. He said, well, you should have at least put my money on deposit with the bankers. See, that would not be true in 2022. You can't even put your money in the bank now and earn interest on it. So when I return, I would have received it back with interest. According to the Bible, you're supposed to put your money in revenues where it's earning interest. According to Luke 19 and 13, you're supposed to do business until I return, I being God. So many people are talking about rapture. My question to you is, are you doing according to Luke 19 and 13? Are you doing business until God returns, or are you doing a job? It's a very difference in doing a job and doing business. Business is making more money, having the skills to pay the bills, keeping more money, not saving. I just showed you in Matthew 25 that savings was shunned upon, it was cursed. Not saving, but through the taxation system. God asked Peter this question, right? Do the king's kids pay taxes? I'm going to show it to you. I have so many people tell me that they are a child of God, of the Most High. But Jesus asked Peter, should the children, now I'm not in no means talking about tax evasion. You get jail time for that. I'm not talking about tax evasion. I'm talking about tax avoidance, legally, morally, and ethically. When was the last time you looked at your paycheck to see how much you're paying federal taxes? How many times, small business owners, have you looked and found that you should be hiring your children, just like 2 Kings chapter 4, through a home-based business model to work in a business for you because the government pays you up to $1,000 a month per child. This is money that you're not keeping. You're losing and you're giving it away. And texting cash flow on the screen, I have a solution for that. So Jesus and his followers went to Capernaum. There the Son of Man came to Peter. They were the men who collected the temple tax. They asked, "Does your teacher pay the temple tax?" Jesus hung around tax collectors and sinners. And Peter answered, "Yes, Jesus pays the tax." Then Peter went into the house where Jesus was. Before Peter could speak, Jesus said to him, "The kings, or we can say the government on earth," but listen, I want to bring out this to you. You know, Jesus called tax collectors kings on earth. You want to curse them. God said the highest heavens belong to the Lord, the earth I have given unto mankind. You are supposed to rule and reign on this earth. Yeah, you're supposed to be kings and queens that reduplicate kings and queens in this earth realm. You know that scripture, you are a chosen generation, a royal priesthood. Why don't you own silver or gold if you are royalty? Royalty owns silver and gold. Look at Queen Elizabeth if you don't believe that. The royal families, they own real money, not this paper fake monopoly money. So Jesus says the kings on earth collect different kinds of taxes. But who are the people who pay the taxes? Are they the king's children? Or do others pay the taxes? See, rich and wealthy people know the tax loopholes of a home-based business and real estate. And Jesus was great at questioning. He was a master teacher. Or do others pay taxes? Jesus already knew the answer, right? What do you think? Oh my God. One person classroom I would never get bored in was Jesus. And then Peter answered, "Other people pay taxes." Jesus said to Peter, "Then the children of the king don't have to pay taxes. But," see, there's a but. For some of you all that say, "Well, that's where I'm going to go and tell the judge or the arresting officer that I'm the king's kid and I don't have to pay taxes." No, it's a strategy to this. But we don't want to make these collectors angry. Jesus said that. So for all the people that's talking about being national citizenship and getting out of tax exempt system, that's opting to live their life, for the very few that do that, right? That's opting to live your life on a very low poverty level, then that's for you. I just found a smarter way when I can make high income and be in a lesser tax bracket. But we don't want to make these tax collectors angry. You don't want to make the IRS angry, people. So go to the lake and fish. He told Peter to go do his occupation. Peter had a fishing business. He was a fisherman by trade. Number one, he told him to go to work. Number two, he told him to do something that he specialized in doing. So this was not out of his comfort area. This was not a hard thing that Jesus asked Peter to do. I'm not asking you to do a hard thing. To get more of the money you make, all you have to do is test cash flow and make a decision. Guess what? It's very inexpensive to do that. It costs you nothing but your time and a change of mindset. And then Jesus said, after you catch the first fish, open up his mouth, and inside his mouth, you will find a coin. Then say you will find cash. Take that coin and give it to the tax collectors. And Jesus said, like that old saying, when in Rome, do what the Romans do. Jesus said, I am on the earth realm as well, so I'm going to not make them angry. I don't know why some people that say that they are the king's kids, think that they don't have to abide by government's economic system, why they think they don't have to learn investing, why they think they don't have to learn the history behind the monopoly money and the cash dollar and what's real money, which is gold and silver. He said, this will pay not only for your taxes, Peter, but for mine. Jesus' homage acknowledged the government's taxation system. But one coin, he didn't overpay. See, when you have a job, you're an employee, FICA, Social Security, and Medicare, out of your paycheck, 30 to 40% comes out in taxes. That means you're only bringing home 60 to 70 cents on the dollar. That's not including inflation tax. This is why you're struggling financially. You don't know how to keep more of that money. I have a solution again. If you want it, if you want to bring home more money out your paycheck or from your small business, if you're a traditional business owner, then text cash flow. If you are a traditional business owner or you're a specialist, like a doctor or lawyer or sole proprietor, or you work solo, the more money you make, the more the government takes. Employees get taxed first, and then six-figure income earners, this is all the S, specialists, sole proprietors, small business owners, they get taxed the worst. They get taxed 40 to 50, sometimes 60% if you don't have this tax strategy. So it's about the money you make, how much money you make. The average house cost right now in America is $300,000. You can't tell me that an income of $30,000 is enough when the average house is $300,000. Listen, I'm gonna say this, and I'm logging off. All right, if you want to invest in silver and position yourself to get free silver at wholesale price, go to my website, put your name, your phone number in case I need to contact you, and your email. Right. Choose Wealth Ambassador and go to option 3. You need option 3 for the residual income offer or opportunity. Cash flow increases your credit scores, increases your cash flow. You get more money out of your paycheck or your small business, right? And if it's a paycheck, you can get that within 24 hours. But I'm going to say this. What if a teacher told you that a person that gets 3 answers correct on a test will have an A, and the person that gets 25 answers correct on a test will have an A as well? You will be thinking, so this person can get 3 answers correct and they'll have an A, and I can get 25 answers correct and I'll have an A. You will be thinking that's a big spread in the point system for both of us to be considered A students, isn't it? Well, let me tell you why they are lying to you about the definition or the label of middle class, because they want people to stay in their comfort zones. They won't call it like it is. They won't really say this is the poor working class average income from about 30 to 70,000, and then from 70,000 to 150,000 you have the middle class, and then 150K to 250K on up you have the upper middle class. No, they tell you that anywhere between 30K and 250K is middle class. Why do they lie and say that instead of saying, no, you are middle income, but you're not middle class, or you're not the poor working class? Because they know as long as you lie to yourself about your label, you'll stay in that comfort zone. And you will never try to level up financially until you look yourself in the mirror and say, you know what, this 30 and 50K is not enough for the lifestyle that I want to live. It's not enough to produce me financial freedom, and I need to leverage up. I need to get above average. Steve Harvey says rich and wealthy people do not average 8 hours of sleep. And no, I'm not talking about working a job that requires you to work the graveyard shift where you can't sleep in the hours of the night that your melatonin is released so you can think on a higher level. I'm not talking about that. Rich and wealthy people, in fact, after 8 o'clock p.m., you can't even call their house or come to their house for a conversation. Everything is shut down because they know that that's their time for their melatonin to get released and to get their gift from God. So they don't work graveyard shift. But what I can tell you is that by 3 or 4 a.m. on the West Coast and in the East Coast, most rich and wealthy people are up and out of bed. They're in by 8, they're up by 3 or 4 a.m. because they understand the power of sunrise and melatonin and sunset and getting the direction they need for the next day. Then they understand the stock market and Wall Street time in the East Coast. That decisions are already being made about their money. So they can't be in bed sleep, especially when the stock market open. People, it's time out for just wanting and selling for average income. Average just puts you on top of the shit pile. Level up, get this home-based business, stack up on your silver, stack up on your pantry, get food that have long shelf life, and your crops, and get ready for the biggest wealth transfer that this generation has ever experienced. I look forward, I didn't mean for this live stream to go this long. I look forward to hear your comments. Drop your comments, give me your thoughts. Is infinite banking for the middle class? What are your thoughts? Yes or no? And leave a thumbs up. And if you're on Facebook, share this on your personal page. Queen out.